What is a stock exchange traded fund, ETF? Welcome to our video on what is a stock exchange traded fund or ETF. An ETF is a popular investment vehicle that allows investors to gain exposure to a diversified portfolio of stocks or other financial assets, all in one trade. Part 1. What is an ETF? An ETF is a type of investment fund that holds a basket of stocks or other financial assets, such as bonds, commodities, or currencies. The fund's shares are traded on a stock exchange, just like a stock, and their prices fluctuate throughout the trading day based on supply and demand. Unlike traditional mutual funds, ETFs trade like stocks and can be bought and sold throughout the day at market prices. Part 2. How does an ETF work? ETFs are designed to track the performance of a particular index, such as the S&P 500, the Dow Jones Industrial Average, or the Nasdaq. ETFs are created by institutional investors called authorized participants, who buy the underlying stocks or other assets in the index and create shares of the ETF that represent a portion of the index. These shares are then sold on the stock exchange to individual investors who want to gain exposure to the index without having to buy each individual stock themselves. Part 3. Advantages of ETFs. ETFs have several advantages over traditional mutual funds and individual stocks. Firstly, ETFs provide investors with instant diversification. By holding a basket of stocks or other assets, investors can spread their risk across multiple companies and industries. Secondly, ETFs have low expense ratios compared to mutual funds, making them a more cost-effective investment option. Thirdly, ETFs offer greater flexibility in trading, as they can be bought and sold throughout the trading day, unlike mutual funds which can only be bought and sold at the end of the trading day. Part 4. Types of ETFs. There are several types of ETFs available to investors, including stock ETFs, bond ETFs, commodity ETFs, currency ETFs, and sector ETFs. Stock ETFs track the performance of a particular stock index, while bond ETFs track the performance of a bond index. Commodity ETFs track the performance of commodities such as gold, silver, or oil, while currency ETFs track the performance of foreign currencies. Sector ETFs track the performance of a particular sector, such as technology or healthcare. Part 5. Conclusion. In summary, ETFs are a popular investment option for investors looking to gain exposure to a diversified portfolio of stocks or other financial assets. They are cost-effective, provide instant diversification, and offer greater flexibility in trading. However, like all investments, ETFs do carry risks, and it's important to do your research and understand the underlying assets before investing. Thank you for watching our video on what is a stock exchange traded fund or ETF. We hope you found this information helpful. Don't forget to like and subscribe to our channel for more informative videos like this.